On today's Hot Sheet, I'm discussing President Trump's housing-related statements in Davos at the World Economic Forum, pending home sales for December, and weekly unemployment data. Today is Thursday, January 22, 2026. I am Byron Lazine, and the Hot Sheet starts now. Morning, live from Naples, Florida. Pleasure to be with you wherever you may be, however you may be listening. We've got listen, I told you yesterday before the Hot Sheet, I listened in 10, 15 minutes. You know, you think at the World Economic Forum, a lot of world leaders there, that maybe you'd have a short speech, but, I made it about 15, 20 minutes. I'm like, I've been seeing all these headlines that, the president of the United States of America is heading to the world stage, the big world conference in Davos, and he's going to be talking real estate. He's going to be making real estate and American real estate affordability, housing affordability front and center on the world stage. I'm like, man, we are in the center of it all here in our industry. We always are, though, aren't we? I mean, you go in any coffee shop, breakfast shop, go to lunch today, people are talking real estate. You know, my wife has this unique ability. She's like, do you hear what they're talking about at the other end of the restaurant? I'm like, no, I don't hear what the people next to me are saying. But like, if you've got that unique ability where you can like, I almost feel like she's like drops into people's she doesn't hear what I'm saying, but she can drop into somebody else's table and hear almost every word of the conversation. But people are talking about real estate all the time. I've got this retreat happening down here with my Connecticut team on the top performers down here in Naples. And they're like, oh man, everywhere we go, people are talking about real estate. I'm like, guys, it's happening everywhere. It's happening up in Connecticut as well. People are always talking real estate. And so we see all these headlines leading into the World Economic Forum, Davos. And it's like, there's, world issues. I mean, there's big issues. Everybody, for the history of time is talking about how do we avoid like a World War III. These kind of things are discussed here all the time. But we saw headlines leading in that, Trump's going to be talking about real estate. Like I said, yesterday, I made it about 15, 20 minutes in, and I'm like, man, hasn't mentioned it once. I'm bouncing out of here. But the BAM team puts together, like we do with Jerome Powell, put together a full transcript. It's in the Hot Sheet show notes. You can grab those right inside of school. But just like we do with Jerome Powell's Q&A, where are the mentions of housing? How many times is he going to mention housing? What's the conversation going to be? Well, this speech went a lot longer than I thought. I thought with all these world leaders, maybe, 20 minutes, but, no, this wasn't any Nikea Wright speech where you get out there for 12 and a half minutes with softball questions. Nope. He didn't mention real estate till an hour in. Okay. So he went for a long time. I don't know how he got that much stage time, but he got it. And ultimately this was condensed into the same time frame, about an hour into what I believe went for over an hour and a half, almost 2 hours, on a speech, a variety of topics, obviously, as you can imagine. We're going to hit these housing ones. But all of the housing headlines we saw, it was condensed in really a 4 or 5 minute section of the speech, which was just over an hour in. Haley, we do have some timestamps from this. Let's go to the 1 hour mark. There was something that he said about a minute in that is very interesting. And I wonder if he's going to try to brand this phrase, because it is the complete opposite of what many people have been saying the American housing market is turning into over the last 5 to 10 years. Let's go to Davos on the housing related statements from President Trump's speech.
Homeownership has always been a symbol of health and vigor of American society, but that goal fell out of reach for millions and millions of people in the Biden era because interest rates went up so high. Today, I'm taking action to bring back this bedrock of the American dream. In recent years, Wall Street giants and institutional investment firms, many of you are here, many of you are good friends of mine, many of you are supporters. Sorry to do this to you, I'm so sorry. But you've driven up housing prices by purchasing hundreds of thousands of single-family homes, and it's been a great investment for them. Often as much as 10% of houses on the market.
Okay, pause that real
crazy
quick.
thing is a person can't get to
go back to right where it is. So don't fast forward. We're going to pick up right where he was, where he was. Everything he said was true up until like often as much as 10% of houses on the market. You can look at specific markets where they've bought in more, but we know the number of institutional investment firms is, under 1%. Okay. So, in certain markets, you look Jacksonville, you look Atlanta, you look Detroit, different places, the number has increased on the whole. Okay. So, that'd be the one thing I'd point out there to be careful with. And again, that's because that number is so small. If you want to ban institutional investors, okay, but it's not going to create some huge opening in the market to create affordability, to create availability at scale for a ton of buyers. Okay, go right to where he was there.
Appreciation on a house. But when a corporation buys it, they get depreciation. Okay, that's something we're going to have to think about too. I don't know if too many people think about that. You buy a corporation, they buy 500 houses, they buy hundreds of thousands, they buy 500 houses, they can take depreciation. A person sweats and works and buys one house, they can't. But homes are built for people, not for corporations, and America will not become a nation of renters. We're not going to do that.
Right there.
That's why I have signed an executive order banning.
Go ahead and we know what he signed. I've talked about it. America will not become a nation of renters. What have we heard multiple times the last 10 years? America is a nation of renters. And so it'll be interesting to see if he has a way of hammering a message home. Obviously, we've seen that over, the last 12 years, even before that. But America will not become a renter nation, when many have said that's exactly the direction that it is going. Now, homes are for people, not for corporations. These corporations rent these homes. They don't live in them. And so those homes become, a new source of rental inventory for people who want to rent a home versus an apartment. So they are still for people, oftentimes at a lower cost. I mean, look at renting a home right now versus buying a home. Let's face it, where we're at right now, at a lower cost than buying a home. So you can argue that rents would go up. And remember, when we talk about the renter nation stuff, like Jerome Powell and the Fed, they do not care at all if America, obviously Trump's going to have different opinions and different feelings about what he wants to see. But the Fed, for example, doesn't care if America becomes a renter nation. He said it explicitly multiple times. It's not a mandate from Congress to worry about if home ownership is going up or down. The mandate from Congress is only, curbing inflation, making sure we get to that New Zealand number of 2% inflation year over year, and maximize employment. Okay, so home ownership rates are not a concern of the Fed. Now, home ownership rates really have hovered, right around 65, 66%. You got some states, like the one I'm sitting in is a little higher than the national average. But really we've been in that, call it maybe 63 to 67 range for, a long time. I mean, I'm going to pull up, I'll pull up Fred here, and this number here, this will look. Wow, look at all the homeowners in 2005. Remember what was going on then? The mortgage crisis. If you ever watched The Big Short, if you didn't live through it like I did, where I bought 3 homes during that time frame. Everybody got a house, multiple houses. Mortgages were given out like Skittles, but that over 69%. I mean, today we're at 65, 66. So, we're on a zoom in on that line. We're in a short spread, 63 to 69. Okay. So, now, home ownership rates have not fluctuated all that much. To say, I could see the trend, people talking about renter nation, but in reality, the home ownership rate hasn't moved all that much, a couple percentage points here and there over time, but still relatively where it's been. All right. So that was one thing I thought that was interesting. We are not going to become a renter nation. Doesn't like the trend line. Obviously has a belief that stopping institutional buying is going to have a significant impact. I do not believe that it'll have that significant impact. You start talking about the tax system rewarding those types of purchases, and that you can't depreciate your, single family home. I like the idea of looking at the tax system as it relates to real estate ownership. Mom and pops, you'd see more inventory come on if mom and pops didn't have the capital gain hit. I know that's a different angle, but that'd be something I'd be looking at. He did cover the credit card interest rate, which again sounds great. 10% cap on credit card interest rates, but that will limit credit availability for a lot of people. And so he did talk through that, and that's something he's asking Congress to do. Credit card companies are going to lobby Congress. And again, you're going to actually lose credit availability if something like that goes through. I don't want to spend much time on that. He tied that into it's one of the big barriers. The credit card debt is a big barrier to a down payment. Well, I find that if you've got, whether you got 10%, 20% or 30, if you're willing to take 10% on a credit card or 20% or 30%, one thing that person's not willing to do is really save up for a down payment on a house. Meaning if you're willing to let your credit card bill roll over into the next month where that 10% actually becomes a factor, housing isn't at the top of the list. It's whatever was on the Amazon order, or maybe somebody had to put something, maybe there's a life-changing thing. They had to put that on the credit card. But, if you got to roll into the next month and actually pay that 10% or whatever, 18% it's going to be, probably not in a position, to be able to go and buy a house. So how much that'll change on people being able to find down payments. And a lot of these programs, it's like, okay, let's get more buyers in there. Well, yeah, Austin would like more buyers. Southwest Florida would like more buyers, but country on a whole is still below inventory pre-pandemic level. You're not going to make things more affordable, obviously, by just simply adding buyers. Certainly not going to be the case. Making it easy on buyers, adding buyers is going to push prices. The other mention was the $200 billion in mortgage bonds. Did mention that on the world stage. He did mention that Jerome Powell waited too long to cut rates, which I agree with that. But that's in the rearview mirror. Can't do anything about it now. 30-year mortgage rate, he said on the world stage, has fallen below 6% for the first time in years. And when he announced the 200 mortgage-backed security spend, I said, oh, you might have a week or a weekend. This is a shot in the arm, not a saving grace for this real estate market. Okay. And already now I am right on that. Okay. So already we have seen that mortgage-backed security announcement when it dropped for an hour to 599. Remember that day that it dropped to 599? It bounced back up to 6.06. The next day it went to 6.01. So Mortgage News Daily dropped for an hour to 599. I want sustainability in the fives. So he did mention, hey, it dropped to, under 6 for the first time. And he is factually correct on that, but it was for an hour. So if you were on the phone with your lender at that moment and locked, congratulations. But with this Greenland deal, which sounds like there might even be the concepts of a deal, we've heard as of yesterday, but all that Greenland talk and maybe some more proposed tariffs in a trade war to apply pressure. Remember, tariffs are just pressure. Don't get worked up about them. He's already backing off of that yesterday because now the deal with NATO might be done on the Greenland. All these things impact our little interest rates. The only reason I'm bringing them up. But when he started mentioning that, what happened? Boom. The entire $200 billion mortgage-backed security deal disappeared. We've seen this multiple times throughout the years. New information into the markets. What are we seeing right now? Because of that, that trade escalation, people, I don't want to own 10-year treasuries. Investors are selling off 10-year treasuries. Gold is skyrocketing. Okay. And that's creating, even after the $200 billion mortgage-backed security announcement, it's creating a pop in rates. So, I guess you can have these little things add up for these short-term wins, but where's the long-term plan? And now he mentions something also interesting. We'll end with this. Is the last thing he mentioned on housing. Go to 105, Mark, the last timestamp that we had, that the BAM team carved out. And he talks about, and I mentioned this yesterday, talks about what affordability kind of really means for all your neighbors, you even, a homeowner.
30-year mortgage rate dropped below 6% for the first time in many years. Another major factor in driving up housing costs was the mass invasion of our borders. And I have to say one thing about housing, because nobody ever says this. I am very protective of people that already own a house.
No, I said it yesterday.
Of which we have millions and millions and millions. And because we have had such a good run, the house values have gone up tremendously. And these people have become wealthy. They weren't wealthy. They become wealthy because of their house. And every time you make it more and more and more affordable for somebody to buy a house cheaply, you're actually hurting the value of those houses, obviously, because the one thing works in tandem with the other. And I don't want to do anything that's going to hurt the value of people that own a house who, for the first time in their lives, are walking around the streets of whatever city they're in, very proud that their house is worth $500,000, $600,000, $700,000. Now, if I want to really crush the housing market, I could do that so fast and people could buy houses, but you would destroy a lot of people that already have houses. In some cases, they've mortgaged their house and the mortgage would be very low. And all of a sudden, the mortgage without any changes becomes very high.
So I brought this up yesterday. There is a ton of virtue signaling that goes on around housing affordability. But there's a reason people talk about NIMBY, not in my backyard, because when they if we want homes to be more affordable in your go ask homeowners in Austin. If you want homes to become more affordable, you're not at peak 2022 prices, Austin. Right where I'm sitting today, Naples. You're not at 2000, late 2000, early 2022 pricing. So a lot of people virtue signal about housing affordability until they realize I'd lose 20% on my home that I bought. I've worked hard for this. So this also is kind of one of the reasons why it's, think about the Northeast. Why is it so damn hard to build a house in the Northeast? Got to go through every permitting process, every little, the people that are making the decisions in these towns own homes in those towns, in those cities, in those counties. They make it incredibly difficult, but they'll virtue signal out there about how bad the system is. And that's where you get support for some of these plans like, oh, let's stop institutional buyers from buying anything, which is fine. I can be supportive of that, but it's not a fix. Okay. The fix to housing affordability where you increase the number of people that are homeowners, which if you look at the history is, go back into the 80s, it's always bounced between 64 and 69 was fake because that was mortgage fraud. Okay. So realistically, you're talking about a window more often between 64 and 66, call it, which was where we're at today, 65, 66. You really want to increase this number dramatically. You want to get to 80% home ownership in America today. Well, all the homes that you own are going to be worth a whole heck of a lot less. That is, and so I think that was something very truthful that was said. I brought it up yesterday. And so there you go. Those are the comments. Nothing earth shattering, nothing game changing there. And just like NAR's pending home sales, which we got a new report out, nothing game changing for sure here. These numbers were not not impressive, and that was as expected though. So December pending home sales come in at negative 9.3% month over month on this December report. Pending home sales as calculated by NAR. The U.S. index is at a 71.8. Anything under 100 is significantly lower activity relative to 2001. So we are way behind the eight ball in terms of housing activity. The housing sector certainly not out of the woods yet. Again, 2026 will feel a lot like 25. The Northeast down 11% month over month. I said, as expected, seasonal decline. Remember, December, things get turned off. December's slow. There's a seasonal decline everywhere across the country in almost all of history for December. So the Northeast and the West are, got the lowest index. The West is at a 55.3, down 13.3% month over month. Midwest is at a 67. Out of the four regions, that's the second best index score. They were down 15% month over month. Now the South was only down 4% month over month. And the South, for all the inventory, conversation in the South, we're sitting on inventory. Sellers don't want to move. Sellers do not want to come off of the price. They don't want to realize, a 10, 15% hit. They are not willing to accept it. And you talk to agents, it makes it sound like there are not deals. It's quite the contrary of what's happening. There are deals happening. They're only down 4% month over month on pending home sales in the South. They're at a 91 on the index. It's the healthiest score by far. But what is there in this region? There are the states in which builders have made the investment to build, have the easiest regulations to build, and that has created the most amount of inventory. And just as the commentary that we just listened to out of Davos, when you create inventory, it will bring home prices down for those that own homes. And that's exactly what is happening. Now, people in, some of these parts of the country can believe that their house is worth whatever the heck the last sale was. But if you got 10 people on the market in your community and nobody's selling, I promise you it's lower today. It's the fact that they just don't want to realize that. But there are homes moving in those regions. Year over year down 3% in pending home sales from December to December. something to watch for because we've seen signs that, hey, this spring could bring us more pending home sales. We got leading indicators. We looked at the mortgage applications yesterday for that to be the case. Still think the future is a little bit brighter than the past on this, but it's going to be incremental. You're going to have to be patient on that. As opposed for year over year on each region, the Northeast, December to December, was 3.6% down on pending home sales. Midwest, 9.8% down. The South was up 2%. And then the West was down 5.1% on that year over year number. National pending home sales. Here are several markets, though, that national was down, but here are several markets that moved up significantly. Louisville, Kentucky was up almost 25%. San Antonio, tons of homes in San Antonio, up 13.6%. Virginia Beach, up 11%. And Virginia Beach, we saw yesterday, Virginia Beach is a buyer's market. Pending home sales are up 11%, so buyers are taking advantage of that opportunity. Charlotte's up almost 10%. Boston's up 9.2%. Phoenix up 8.7%. Oklahoma City up 8%. Miami, there's downward price pressure there for sure, up 6.3% on pending home sales year over year. Pittsburgh and Memphis. And so notable year over year gains there in those markets. It's your pending home sale report from NAR. As we look into next week with the FOMC meeting ahead, what's going to be the Fed decision? Well, we know Polymarket, how they feel. The bettors feel like there's a 98% chance that there will be no change to the interest rate cut. Obviously, one of the things that they're looking at significantly is the job market. Okay, inflation does seem to be in a good spot right now. We'll see how some of these new tariff conversations can impact that. We'll see what the SCOTUS decision on tariffs, where that lands. But, jobs is going to be the other big thing that we're looking at each and every single week. This is a little bit of data here on the weekly unemployment and not going to move the needle. I'll tell you that. Initial claims, only 200,000. That's an increase of 1,000 from the previous week's level. And you've got a 4-week moving average of 201,000. Initial claims here to start the year are moving down on that 4-week moving average. I mean, we had a 4-week moving average previously, somewhere in the fourth quarter, up over 220. You got to get up over 250,000 on the 4-week moving average, which would take some significant jumps to really start being concerned about weekly unemployment. So the job market, while there were signs at one point last year that it was getting softer, has certainly not broken and is not showing many signs right now of being a major concern, which gives the Fed cover, obviously, to do what Polymarket and CME Group are projecting for next week, which is just hold firm and do nothing. The 30-year fixed daily number here, according to Mortgage News Daily, comes in at 6.2. So the gains we had on the $200 billion mortgage-backed security announcement have basically been erased. We'll see if maybe some of this trade tension cooling off a bit here with the announcement last night that there might be some type of NATO agreement on Greenland and then backing off on tariffs. We'll see if that kind of evens back out as, again, investors backed away from things like the 10-year Treasury with the conversation that was happening. But we're still at an elevated point here, 4.271. This is right near the high water mark for the last month. The last 90 days, really the last 4 months, we're at a kind of a high water mark on the 10-year Treasury, 4.271 here as we start the day today. We'll see where that goes and see what new information comes out. A lot of things are always happening here that impact the greater economy and certainly the real estate market. Best thing you can do is deliver the confidence. A lot of these headlines, are being dissected by your buyer, and there's so many, or your seller, and there's so many of these headlines coming at them each and every single day. first, I keep pushing it, but first mover advantage is going to be really important this year. You've leverage points in the early part of an upcoming spring market that don't exist in the later part of the spring market. So those plans are being built right now. Those conversations are being had right now at this time period to prepare for the first half of the spring market with the really sharp agents. Build your skills. Join us inside of BAMX to work on those skills each and every single week. We've got our call challenge that's happening right now and role play masterminds for members only each and every single week. Join us in BAMX. Inside of our classrooms, you've got the call, the quarter one call challenge ongoing right now. Role play masterminds every single Tuesday, members only. New content dropped each and every single week, along with hyper local content course from Melissa Kernut. You've got the hot sheet database every single day here on the hot sheet. If you love the hot sheet, if you love the show notes, how we kind of bake the cake, all the slides every single day are uploaded into the hot sheet classroom. We have Sharon Shiratz's knowledge bank and more, all inside BAMX, the #1 community helping agents close more deals today. Run the plays that are working, BAMX. And you can go into that, try that out for 7 days for free, school.com/BAMX. Make sure you sign up for BAM Pro Bowl too, by the way, BAMX member or not. If you're part of the BAM community, sign up for the BAM Pro Bowl, BAMProBowl.com. That's coming up in February. And we got some amazing speakers. I'm going to be talking to James Dwiggins and Jared James at the same time. We're doing a panel with both of them. Totally free, BAMProBowl.com. Along with other speakers like Neil Dingra. Go to BAMProBowl.com. Make sure you're signed up for that opportunity coming up here in early February, right before the Super Bowl. Okay, don't sue us, NFL. All right, there you go. There's your hot sheet. Good luck today. Toodaloo, and we'll see you next time.